Hello and welcome to Chart of the Day Cafe for Tuesday, July 12th, 2016. Just going to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Thank you for your patience with that. So as regular viewers well know, we always start our videos off with a look at the Russell Index, and for that we use the IWM, which is the ETF that represents the Russell 2000, looking at it on a 5-year monthly time frame, and we've been paying particular attention to the blue channel that the Russell traded within through all of 2014, had this little lift up and out in early 15, the subsequent sell-off, and here's where we are right here, right now. Candle for the month of July so far looking pretty bullish. Only halfway through the month, but so far so good. We talked about the candle for the month of June being a doji indecision, so it's nice to see this candle looking strong for the month of July and price being persistent. Let's move it away from the 5-year monthly to the 2-year weekly so we can better see how price is behaving. We have this orange line of more minor support drawn in here. Here's our blue band. You can see that price is up and over the upper blue band. This is the weekly chart. We've had 2 solid weekly candles in a row, bullish, bullish, and here we are up and over that upper blue band. I'm filming this at about 8:15 on Tuesday morning. Alcoa announced earnings last night. They were positive, so the market is going to be starting off in the green. So that price strength continues. I am going to wait before putting any new charts forward for now. I want to refer you back to this chart that we talked about before, the indexes and the, let me get rid of my drawings, sorry about that, the 50 and 100 day. So this is the weekly chart of the INDU, the Dow. You can see that the blue, the 50 day crossed the 100 day, the red, back in early 2010, and since then it's been trading up and over the red line, but it's now crossed below. So I just want to see that move up and over the red line again. I like to see that 50 and 100 on the weekly up and over. So we're just going to sit tight and not put any new charts forward until we see that cross happen again. It's the same thing on the Russell. Same cross, the blue is now below the red, and the S&P, blue below the red. So with price strength continuing, it should cross up again, but until then, I just think I'm not going to put any new charts forward. Having said that, old charts that are looking like they are sitting at an area of support here, let me just put it into my other is NXP. Let me put my drawings back in. This is the mobile payments company that we talked about before. I'm never making any recommendations. You always know that. It's just a heads up, maybe for your watch list. Everyone has their own way of doing things. But at Chart of the Day Cafe, it's all about price being up and over that 8-day, the blue line. So it looks as though if we get a strong day today or tomorrow, price will be up and over that blue line, and it's sitting at this area of support. So this might be an interesting area to add NXPI to your watch list. It still has a very strong value score, and it has a forecasted earnings growth rate of 21%, a PE of 11.49, and it does not pay a dividend. But having said that, the sales growth over the last 12 months was 52%. So it looks like it's in a nice growth trajectory. So we'll see. It's all about price being up and over the 8-day, and might be worth keeping an eye on and perhaps adding to your watch list. So with that, I will leave you. Have a great next couple of days, and we'll put another video out on Thursday. Take care.